Welcome to Buy, Hold, Sell. My name's James Marlay, and today I'm joined by Phil Parker from Altair. Phil.
James, how are you?
Very well. And Simon Bonouvrie from Cadence. Simon, good to have you back.
Hi, how's it going?
Despite all the doom and gloom that you might read out there, the Australian economy appears to be bucking the trend, put in some surprisingly strong growth numbers, GDP coming in at around 3%. 6 years since we had the mining downturn and commodity stocks are starting to turn around. Phil, I'll start with you.
Yep.
The Aussie economy muddling its way through, but is the glass maybe a bit more half full than it is half empty?
Probably. I suppose I've just been sitting down with Steve Roberts, who's our chief economist. His view really is that there's real pockets, there's updrafts and downdrafts. You're starting to see some downdrafts coming into the retail sales, domestic retail sales obviously. That's coming about because of the slowdown in investor loans. You'd have to say, APRA's done what they needed to do. We talked about this a few months ago, and it's great to see, I suppose, the slowdown there because it's probably taking some heat out of the property market, which is long overdue. But that's having an impact. There's a flow-on effect, and you're seeing that through the retail stats coming out. So we think there's probably a lot more wobbly results to come out of retail, but there's still some really good pockets in the economy that you can take advantage of. Healthcare, some financials, other sectors that I'm more than happy to talk about as we go through the show. Simon,
some of the themes like companies that can sell into China, companies exposed to housing, as Phil's touched on, provide some opportunities. Are the parts of the Australian economy where you think there's better pickings than others?
Oh, look, obviously the economy has made a good transition away from mining investment into the services side of the economy. A big factor is the lower Aussie dollar that's making our exports more competitive. So a sector to look at, for my mind, is the tourism sector. So low Aussie dollar makes it cheaper for foreigners to come and visit Australia and holiday here. So, you've got stocks like Mantra, Flight Centre, Sydney Airports, Qantas. They all benefit from, say, a lower Aussie dollar. So, as you mentioned, the economy, I think, is transitioning well.
Okay. We've seen just in the last few weeks that Aussie dollar's not been quite as weak as it was, say, at the start of the year. Are these stocks that you're talking about, are they super sensitive to that sort of currency, or has the work been done by the currency coming along?
Yeah, I don't think they're super sensitive. So my personal view is if commodity prices, if they're bottomed, we're probably seeing a bottom in the Aussie dollar, but at this stage we don't know. The trend over the last couple of years for the Aussie dollar has been down, and we've had a bit of a bounce recently, which has coincided with a lift in iron ore and oil prices. For those companies that I just mentioned, the bounce we've had, it's only a few cents, so it's at the margin. I think as long as the Aussie stays under 80, those sectors I mentioned are going to get a benefit from a lower Aussie dollar.
Phil, there was a big trend through 2014 and 2015 for people to look to get their money offshore. With the dollar where it is and the economy moving through, would you rather be shopping in Australian stocks or offshore stocks? What's your view here?
I suppose our mandate from our clients is to invest in Australian listed companies, but we made damn sure that we were looking for companies that were selling a lot of their goods and services offshore and then remitting that income or that profit back to Australia. So if you look at the stats, you can see that those companies are continuing to do well. So we still like those companies. We see that that's on top of some of the local ones, like Simon was mentioning, like your Sydney airports, and that have benefited from the tourism inbound. I'd probably think with some of the restrictions going on in China, that inbound tourism might start to slow down a bit. There was a survey done by CLSA the other day that showed that, it was the second favoured thing to do was to travel, but if push came to shove and the economy continued to slow in China, they'd probably slow the tourism would come out pretty quickly, their travel, whereas they'd keep spending on their children's education. In terms of, I suppose, the other companies that we like that are offshore, so we've always maintained you don't always have to go offshore to get the value. And you can get some of the local benefits from franking credits in their local business, but then get the offshore revenue as well. So things like Amcor, Pact, Aurora, Ramsay, some of the other big healthcare groups offshore. We're still very comfortable with those businesses shipping their profits back to Australia, and we know the businesses, we know the people running them, we can meet them, So we just feel more comfortable doing that.
A recent report, research came out sort of talking about some of the five trends that will drive the Australian economy. Favourable demographics and the opportunity for healthcare stocks was one that was picked up. We've seen healthcare stocks underperform a little bit this year. Sure. Is that a short-term aberration amongst a long-term trend?
Yeah, I think in the long run you're going to see healthcare demographic just play out strongly. Obviously you've got a slowing immigration to Australia, but you've got a larger group of the internal population getting older. So we still like the aged care sector. SD has been a great stock for us in that sector. We also like the operators of the hospitals and the drug companies like CSL and the like. So we're still very much, playing that theme out. We think that's an ongoing, it'll probably see me out, but 10, 20, 30 years of growth in that sector to come.
Yeah. So healthcare, is it a space that you like?
I do like it. So the sector has resilient earnings across the board. However, we have seen a number of regulatory reviews announced over the last 6 to 12 months, which have probably put a dampener on the sector. People are hesitating, waiting to see what the outcome is from these federal government reviews. Also, I'd say globally, the healthcare space, especially in the US with the biotech and pharma stocks, they've been in a bear market. So we've seen some big price falls in offshore pharmaceutical and biotech stocks. So it's kind of rubbed off a little bit on our sector as well. But overall, I think it's a good sector to be in long term. Okay,
just a final question. In terms of looking offshore, as you guys have the ability to look offshore and look domestically, how would you sum up the opportunity set for people looking at stocks on the Australian market at the moment?
There's always good opportunities here in Australia. But offshore, there's a wider range of, I would say, industrial type stocks. Here in Australia, the index is very heavily weighted towards financials and resource companies with a narrow band of quality industrial companies, whereas offshore, there's so many quality industrial stocks to choose from, and they're large caps trading on cheap multiples with good earnings growth. So, we feel there's opportunity to look offshore in that space. In saying that, our two biggest positions are Macquarie Bank and Macquarie Group and Henderson. So we've picked two stocks that largely generate revenue offshore, and it gets translated back into Aussie dollars. But we do think there's tremendous opportunity offshore.
Okay. Well, it sounds like there's a few select sectors on the Aussie market, but you might be doing well to keep an eye on the offshore ones as well.